Good morning. This is your weekly update with Jim Stewart. I'm the Chief Investment Officer here at Worth Asset Management. Today is October 9th, 2023. We have a war starting in the Middle East. We get fresh inflation data this week in the form of PPI and CPI. We also start the earnings season off with the banks on Friday. So let's take a look at how we fared last week and where we are headed. So let's jump on in.
Okay, let's go over the top three market headlines from last week. The first week of the new month and new quarter brought somewhat mixed action for the stock market. The S&P 500 and NASDAQ both registered gains, while the Dow Jones Industrial Average and the Russell 2000 small caps declined for the week. 8 of the 11 S&P 500 sectors closed in the red for the week. The largest declines came from the more defensive areas in the market, where energy was down over 5%, consumer staples down 3%, utilities down 2.9% for the week. Yields. We went over this chart last week, and the yield said, I'm going to continue to move higher, even though the growing sense that the bond and stock market are oversold in the short term and due for a bounce. The yield said not just yet. On the 10-year, they went up 19 basis points to finish at 4.78 for the week. For the 5-year yield, it went up 15 basis points, so 1 year was basically flat, and the 30-year yield went up 22 basis points for the week. Oil prospects, a lower global demand for petroleum weighed on the oil prices for the week, and the U.S. crude dropped down to below $83 per barrel for a 9% weekly decline, its biggest decline since March of 2023. Now, with the war in the Middle East, Monday morning futures are pointing again to higher oil prices, and we will see how the week shapes out after this pullback. Jobs. The big number was this Friday's non-farm payroll jobs number. It exceeded expectations, almost doubled expectations, and finished out the month of September at 336,000 jobs when it was estimated at 170. In addition, the prior monthly estimates of jobs growth were revised upward, and the unemployment rate was unchanged at 3.8%. All right, let's go over the top 10 major asset classes, their performance, and how we're positioned on a short-term and intermediate-term basis. Well, the commodities with the drop in oil prices went to bearish on a short-term basis. That was the only move. And so the only thing that we are remaining bullish on the short-term basis is the US dollar. If you zoom out on a 3-month basis, we still have the dollar on the bullish side, and commodities, because it had such a big move, even though it went bearish on the short term, still remains bullish on an intermediate term basis, where everything else is still in the red. All right, let's go over the chart of the S&P 500. We went over these gaps for the last couple weeks, and we said this was a runaway gap that had to be filled. Well, it did get filled last week, and then it doubled down and went back down a little bit further, but it created a gap down, which most likely will then be filled. And this is a huge resistance area. So the bulls will be, once we get up and fill that gap, they will probably try to push that back up and get above the 4,500 level and try to break this lower highs and lower lows. We'll try to reverse that trend, where the bears will be trying their hardest to push that back down. So it will be a battle once we get up in that 4,400 range. So keep an eye out on that range on the S&P 500. All right, let's go over the top 3 market movers for this week. On Wednesday, we get the Producer Price Index and the FOMC meeting minutes. And that will be huge because, again, they like to parse through that and find out exactly what they were really kind of talking about, and see if there's any indication of they're going to continue to raise interest rates or stop raising interest rates. On Thursday, we get the CPI, the Consumer Price Index, And right now, the projections are to have risen 0.4 last month or 3.7 year over year. When we exclude volatile food and energy costs, the core prices were likely at 0.4 for August and 4.2 year over year. On Friday, we get the start of earnings. The season kicks off with the reports from the big banks. They're usually the first ones to report, and they will be reporting this Friday. JP Morgan Chase, Wells Fargo, Citigroup, BlackRock, and PNC. We will get a look how their earnings, after all their deposits have fled to the money market, will kind of get an early indication of how this market is heading forward. All right, that's it for this week. Thank you for joining us. Our next update is Monday, October 16th. As always, continue to subscribe, like, and follow, and we shall see you next week. Have a great week trading.